This edition of Tech Talk is brought to you in part by Telex, the interconnection company, owners and operators of 56 Marietta, the most network-rich co-location facility in the Southeast. Tag TV and Tag Radio. Technology now has a voice of innovation and information. Get it on www.tagtvonline.com. Efficient and reliable execution of e-commerce and database transaction. World-class performance based on speed and reliability measured by the number of transactions per second or per minute. Reliability expressed as a percentage. Welcome to the world of financial transaction processing and the first in a series of tech talks focused on the technology backbone leading the 21st century future of e-commerce. Greetings, everyone. It's Tuesday, October 13, 2009, and this is Tech Talk with Technology Association of Georgia President Tino Mandela. I'm your guest host, Frank Baia. Secured, monitored financial institution accounts receivable lines of credit for small business and to enable those businesses to increase their access to capital and reduce their credit administrative functions. Reduce the burden of administration and risk, optimize revenue, provide real-time visibility and monitoring. No small advantage in today's, no less tomorrow's, digital global commerce ecosystem. The Tech Talk series on financial transaction processing starts with what you might call hyper-attention, to know your business both inside and out, as we meet Daniel H. Drechsel, Chief Executive Officer of FTRANS Financial Transaction Systems. Dan joined FTRANS in 2008 and serves as both CEO and as a member of the company's board of directors. With over a quarter century of experience as a high-profile executive, level general manager in sales, operations, and technology management positions, Dan is known for extensive expertise at successfully growing emerging businesses into large-scale, highly successful corporations. Coming to FTRANS from SAP, where he was general manager of the banking business in the Americas, Dan had previously served as president of Global Energy Decisions and president and COO of NASDAQ-traded S1 Corporation, an industry leader in financial institution technology and one of the key leaders in the growth of Internet banking. His list of stellar career experiences spans to prior key executive roles at CheckFree, ADP, and Dun & Bradstreet. Tech Talk takes a look at financial transaction processing as the first in our series is to greet one of the industry's top executives and FTRANS CEO, Dan Drechsel. Dan, welcome to Tech Talk.
Frank, it's great to be here.
Pretty dynamic, almost as we always say, dynamically fluid industry with so many changes and impacted by technology. Tell us a little bit about, I guess from the start, what does FTRANS do?
FTRANS sits at the point of intersection between banks trying to lend money to businesses and small businesses trying to increase their funding.
So when we talk about market opportunity, in terms of both sides of that equation, give us a little insight into what you would describe from a corporate standpoint as your market opportunity.
Well, there's two significant things going on in the markets we serve. One is that the banking industry today is trying to diversify itself away from its dependence on real estate that's been developed over the last 40 years, which has come to light in the last 2 years as everybody reads in the headlines these days in terms of bank issues around real estate and the value of the lands and buildings that they've lent money against. And the need for small businesses to increase their funding to help fund their survival and growth. Today, there's about $1.2 trillion of accounts receivable balance sheets, accounts receivable funds on the balance sheets of small and medium-sized businesses. Those have predominantly been funded with equity built up in the business by the owners over the course of time, and would be better served as bank loans fundamentally.
So explain, I guess, from a novice standpoint, just exactly how does FTRANS work? I mean, in that particular environment, just exactly not only what is its role, but how does it actually work?
So FTRANS goes into a small and medium business. We work with the business to outsource their credit administration, collections, and cash applications functions, their accounts receivable functions. We typically professionalize those. Most small businesses don't run the kind of accounts receivable operation that your Fortune 500 company might run in terms of best practices. So we implement industry-accepted best practices to professionalize the operation. Then we expose what's going on in the receivable operation, every invoice that goes out, the credit quality of who's been invoiced, every payment that comes in. We show to a funding institution, typically a bank, that will then lend money to that small business so that it can get paid essentially for its invoices in a period of 2 to 4 days instead of 6 to 8 weeks as normally occurs in the standard course of business.
Now, obviously, all of the criteria is set up in advance so that it's, it isn't just a, on request or a SaaS type situation where there's a software as a service coming from that small business. This is a banking relationship that they already have with an institution.
Or that they create as part of implementing the outsourced administrative services, yes. So we often go with a bank to a customer and say, if you'll outsource your accounts receivable operations, let us professionalize them and expose the information in them to a bank or a financial institution. They'll set up a credit line for you in order to fund your receivables.
Oh, interesting. So again, it becomes a competitive advantage from the standpoint of the offering of the financial institution going out to its potential customer base. But if I'm understanding correspondingly, the small business, once they're enabled with FTRANS, actually is almost in a, would you say, a money market type situation where it has more access to capital because of other maybe banking relationships that it doesn't already have established by using the system?
I wish money were so widely available that we had people competing for these loans. Someday we'll get there. But today, really, most institutions or most businesses essentially have no access to bank capital at the size range we're talking about, which is really typically your business that's between $50 million in revenue and $1 million in revenue.
Okay.
And their access to bank capital is very scarce today. So, oftentimes we'll set them up with partner banks that we work with that have a known and trusted relationship with FTRANS and understand our program of professionalizing and collateralizing the accounts receivable in question and are comfortable lending against that sort of asset.
Now, is some of this struggle inherent in the financial systems on a general basis, or is it a case of a reflection of the current economy? When you talk about a $50 or $100 million company having a struggle to capital, I would think that, they've got proven performance, proven projections, and, maybe that's, again, oversimplifying it.
Well, I think you'll find that most businesses of their size under $50 million in revenue have historically been relatively thinly capitalized, particularly when you get under $20 million. Often they started with a very small amount of money. The owner has salted away the earnings to the extent they could, but also borrowed on credit cards and, borrowed on their house and put that money into the business, and they're typically pretty thinly capitalized. And they have not traditionally had access to bank capital because the assets that constitute the business, particularly if it's a service business or a distributor, there have not been significant real estate or inventory or other sources of repayment for a bank loan that the bank could look to in the event of a default by the business. So accounts receivable has typically been their largest asset, and it's been one that's very, very difficult for the bank to track historically. They haven't had the systems or technology or processes in place that we're able to put in place for the business and then show to the bank.
Targeting your customers? How do you, I get an understanding by and large you got a pretty clearly defined target customer, but again, I think it's a case where how big is the marketplace in terms of the qualifications that you're talking about? Because I'm guessing you're not just talking about the revenue figure, you're also talking about, as you point out, the quality of the financial situation.
It is somewhat the quality of the financial situation, but in large part for us, it's the quality of the customers you're billing for your services. So we credit underwrite each and every one of our clients' customers that they supply services to. And if they're selling to the state of Georgia or Home Depot or Lowe's or Walmart, that receivable is of good credit quality. And we can typically show that to a financial institution, and they can get pretty comfortable lending a fairly significant proportion of those kind of high-quality receivables, which is what is in most business portfolios.
So again, would it be a case where, from a target customer standpoint, obviously as you're bringing out, it's less about them. Of course, it does, but it has more to do with the companies that they're doing business with. And do you, in a sense, maybe provide that as a service prior to getting involved with customers? In other words, as a way of qualifying your customer base for future ability to leverage those outstanding invoices?
We do. As we work with customers in a sales cycle, we'll help them to grow an understanding of the credit quality of their customers.
So it's both proactive and reactive from a
absolutely
powerful,
and an ongoing basis. So every day we continuously monitor the credit quality of all of our clients' customers, and if they develop any negative tendencies in terms of credit, we'll alert our business owner to the fact that one of his customers may be having a little bit of a problem, and he should be more careful selling to them. In many cases, they'll stop extending trade credit to those customers that we identify as having credit issues and avoid defaults and bankruptcies and those sorts of things. To the point this year, out of all the significant public bankruptcies of public companies, which there have been well over 200 so far this year, our customers have yet to lose a dime.
Wow. I mean, it took me a minute. That's, obviously, I guess part of the issue is just, even if you are small businesses, awareness. How competitive is the marketplace in terms of where FTRANS stands from a competitive advantage versus the competition and the overall size of the market?
Well, what we do, as we've described, is get small and medium businesses that sell to other businesses access to bank capital or bank rate capital, which has been something they haven't had a lot of access to. At the very highest end of the credit quality spectrum, some small businesses are able to borrow from banks on term loans or SBA loans. And at the low end of the quality spectrum, companies have had to turn to factors, which unfortunately are extremely expensive, although in some cases effective. And for us, we're in that large middle market of that credit quality area where they're great companies, but they may be a little short of capital, may never have had the capital in the institution that they might have liked to fund their growth and development. But they're producing valid and useful products and services that they're selling to good clients, and we can help them capitalize on that in order to get bank rate financing to expand.
And to maybe get in a little bit in terms of cost, how do you deal? Is it a system that you purchase? Is it a per transaction? Is it an interest figure based on the amount of money that's involved? How does that work?
No, we actually price to our customers our services on a flat monthly fee to work with them on an outsourcing basis to handle their credit and collections and cash application and lockbox needs. And then they mostly are priced by the bank at loan rates that might be prime plus 1 or 2 or 3%.
So again, it's more than just a technology, more than just a process to reduce administrative costs and risk, as we've talked about before. But obviously, there's a bottom line cost efficiency in terms of the system or the service as well. Well, before I was about to close, but am I correct about that?
You absolutely are. Normally, our customers can offset the cost of our services with savings in terms of their receivables operation and achieve a financing vehicle that, compared to their equity finance costs, which we always say in these size businesses is somewhere between very expensive and priceless.
Really?
They can achieve that at bank financing rates, which are often half of what they might otherwise look like.
When we're talking about how you stay competitive in this global economy, I can't even begin to imagine a company, and I'm not being self-serving here, I mean just listening, being an entrepreneur myself and understanding the kind of service that you're providing, it's almost how can you compete without it rather than whether or not you should use it or not. We've been speaking with Dan Drechsel, the CEO of FTRANS. Dan, I'm afraid our time has run out, but again, hats off to a great service and much success. I'm going to only assume that the company's got to be growing, and projection for future growth has got to be high based on the service you guys are providing. But thank you very much for taking a few minutes and talking to us here on Tech Talk.
Frank, thanks for the opportunity.